Hello, it's Rhonda Thomas, and we're just about to do Managerial Accounting Chapter 2's intro and basic exercises. So let's go ahead and get started. So I have the Cengage open here on the left and my Excel spreadsheet open on the right. Okay, and so Chapter 2 is called Job Order Costing. Job Order Costing. And this is a pretty good example of job order costing. So once again, this is our inventory account for materials. This is the production process, which is known as work in process. And notice when materials are requisitioned to WIP, once they get to WIP, they're given a job number. Job numbers usually go in sequence. Now, one job can be caught back in production while another one moves on, but they're still going to maintain the same job number from being assigned in work in process. So remember, work in process has direct labor, manufacturing overhead with these materials, and all three of those come in. Remember, these are assets right here. The music store is the cost of goods sold, so that's the retail store. And the retail store, when they buy when it gets shipped there, it has to be sold. Okay, it has to be sold. So materials come out of the inventory account, go into WIP. So does direct materials, so does direct labor. Don't forget, all three of these accounts probably have a beginning balance and an ending balance. So we'll do our best to watch for that. And then these three are on the balance sheet. And this one crosses over to the cost of goods sold. And cost of goods sold is the income statement. So let me read you a couple things that I want to make sure you understand before we move on. We're going to accumulate jobs under a job number. Okay, just like this was 72, 71, 70. So we're going to keep all the costs for that job together and move them through the production process. So just to remind you, direct materials, direct labor can be directly traced to the products that we are manufacturing. However, this third option, one more time, manufacturing overhead, also known as factory burden, you cannot directly trace what's in overhead to a product. Okay, we're going to apply overhead to WIP through an estimated predetermined overhead rate and then compare it to actual. So manufacturing overhead is going to have its own T account. We're going to allocate to each job with estimate rate times an activity driver. Now, so we're going to learn about predetermined overhead rate, and that's so much per, usually it's per hour of some sort. Usually direct labor and machine hours are used. So you need to watch for those. Okay, so for every hour of direct material we have or machine hour we have, we apply, means to add to or accumulate a certain dollar value of overhead. Okay, please remember that the T account, while it does have debits and credits, it acts as what's called a clearing account. So if you're not used to that, that's okay. So a debit in the manufacturing overhead account are for actuals and the credit is for applied. Then every time you have a manufacturing overhead account, when it's all said and done with creating products and we're ready to go from one period to the next, right? Like 1 year to the next, then there's two things that can happen to the account. It can either have a debit balance or a credit balance. And we'll see that here in a minute, but I want you to understand a few buzzwords here: over applied, overestimated, over absorbed. Okay, so that means that if there's a debit balance, we estimated too much. If there's a credit balance, the opposite is true. So, and that would be if a credit balance is on the right side of the T account, which is known as applied. If it's on the right side, then it's underapplied, underestimated, underabsorbed. Okay, manufacturing overhead balance is closed to cost of goods sold. So when we're finished with a period of time, we're going to have to close that account. Remember, close means zero, zero. Close doesn't mean that you never use that account again. So I'm going to put 0 here. And we're going to get started, and we're going to go as quickly as we can. Just to refresh your memory, these are indirect materials, indirect labor, expenses for the plant or the factory, salaries, maintenance. Okay, so I might put that down. I'm just trying to get some buzzwords for you. Okay, so maintenance, quality control, things like that. Okay, all right, let's get started here. All right, so the first problem is issuance of materials. To issue materials means to move them out of the materials account and in to work in process. Okay, so now I know that, let me just go ahead and do this. I would like for you to always check to see if there is a beginning balance here. Okay, so I'm going to put beginning because it's a good habit. It's a good habit. So there's 0. Okay. All right, and then this one will also have a beginning balance. And I'm just going to leave it 0. And then this would be finished goods. And this is an asset account with a debit normal balance, and it can have a beginning balance, but I don't believe we have any. All right, so it says on May 7th, Jernigan Company purchased on account 8,800 units of raw materials at $6 per unit. Okay, we're going to make a journal entry for the purchase. So let's do the math. So if you take 8,800 times 6, I get 52,800. So we're going to debit materials for the amount we bought, and we're going to credit accounts payable because it was purchased on account. Okay, so let me go back to where I was here. All right, so I want to make this a certain color, and okay, so you can match up what we have here. There's that one and this one. Okay, so let's go ahead and put this in. So this is making a purchase. Purchases only happen normally here in the materials account because there might be, anyway, let's just keep going. All right, so on May 7th, we're going to debit materials for the amount of 52,800. Okay, and we bought it on account, so we've got to put that in. Right, and now we're going to journalize the entry on May 31st to record the requisition from the material storeroom. So it says raw materials were requisitioned for production. So we have one job that's number 200 and one job that's number 305. Okay, so here's how many units. Job 200 at 6, and here's how many units. Job 305 at 4. So here we are. Be sure to label units. Okay, always label units and always label dollars, dollar signs. It will help you a lot. Okay, all right, so $6,160 times 6 is $36,960, and job 305 has 1,584 units at a $4 price or cost, $4 cost, which equals, okay, so these two jobs are going to be added together. And when you add it together, that's the total materials that's going to come out of here, out of this account and into this account. So these two go together. Yep, these two go together. So there is your second entry. We're going to do one just like this, right? So into work in process or progress. It can be whatever. Okay, I've got 43,296. Now, this may all go to WIP, but once it gets to WIP, it'll get a job number, which is why the job number happens when the materials are put into that account. Okay, and it's going to come out of the materials inventory, and it will stay divided up with their job numbers. Okay, job numbers. Okay, so let's see if we're right. Okay, then we're going to do one just like this. Okay, going to do another one just like it, but it's going to be a blank sheet. So instead of a drop down, you're actually going to have to type in the name of the accounts, which makes it a little more difficult. Okay, so let's go ahead and find out what the information is. So let's just, it's once again issue. To issue means to sell. In fact, I'm going to put that up here. To issue. To issue or issuance. Okay. To sell or no. Not sell. To send. Okay, to send. To send. Or to move forward. To send, move forward. Okay. So just watch the language. Okay, now we're going to do another one. This time it's going to be job 200. Okay, we're staying with the same job number. That's nice. So let's go ahead and find our, okay, just a second. All right. Okay, so it looks like we've got 10,000 units at an $8 cost. All right, so that makes $80,000. That is the purchase. Yep. Okay, and that was on May 7th. So there's 80,000 and 80,000 purchased on account. Purchased on account, yes. So here we are again, showing our work so that if anybody asks, we can go back through it. Okay. All right. And then the next one is during May, raw materials were requisitioned as follows: 7,500 units. Okay. And once again, this is direct materials. for both jobs, job 200, job 305. And we're working on direct materials first. Okay, so okay. Okay, we're ready to put this one down here now. Okay, we're ready for number 2. Okay. Okay, so here it is. All right, and then the raw materials in the same month of May, raw materials were requisitioned for as follows: 7,500 units at $8 a piece. So there is 60,000. And then job 305 is 1480 at $5 a piece. Okay, and then you want to add these two numbers together to know how much went out of direct materials. And we don't have to keep them by the job, but they will be kept by the job when they get over here. Okay, eventually. So we're going to do a credit to materials to move them out. And then a debit to WIP for the cost of those materials. Okay, so let's go ahead and put this in. And this happened on May. First one is the purchase, right? So May 7th. All right, we figured that right here. So this is the purchase. And just a minute. Okay, we want to make sure we label stuff. All right, so this is the purchase calculation. Okay, so here's how we got our numbers. All right, so materials gets a debit for the purchase of $80,000, and the credit goes into accounts payable because we didn't pay it right away. And then May 31st is when we were going to do the balance sheet. And so the entry is going to be a debit to work in process and a credit to materials. And then we would be able to figure out what the balances are in these if we needed to. Okay, so just so you'd have an idea. Once again, we look to see if there was a beginning balance, and there's not. So you'll want to so if there's no beginning balance, you should make note of it. Okay, so B is for beginning balance. All of these have zeros in their beginning balances, and if this is finished goods, which it normally is, okay, and once again, I'm keeping them in line as far as how much, oops, okay, there you have it. All right, so then we have available, right? We have available. So I want to make sure that you know to do this. So there's going to be an available subtotal in all of these. Okay, so because we're going to have an ending balance, E is for ending. In fact, I'll just put beginning here. That's for each one of those. And then ending is going to end. So each of these will have an ending balance because they're a balance sheet item. And we've got to, okay, so we want the bottom one. Yep. So I'll try my best to make sure you understand how these T accounts work in case you didn't use them very much in financial accounting, which is okay. Everybody learns a little differently. Okay, so we've got these in here now. And like I said, if we needed a balance in the materials account, I won't do one for WIP because there's direct labor, there's manufacturing overhead. Okay, but I am going to put an available amount here. Remember, an available. It's good to do that. So when you know what it is, you add the beginning plus what you purchased is available and hit enter. And I understand it's 80 and that was easy to see, but okay. And then this is a purchase. So I'll just move this over. P is for purchase. Okay, so we did that and then we moved it out of here and into here. I'm not going to go ahead and put the rest of the WIP because we'll be getting to that, but just know once these materials reach WIP, the amount for each job, which they described already, the amount of 60,000 of materials will go to job 200 and the amount of $7,400 will go to job 305. Okay, so let's check our work. Should be okay. Let's make sure that we've gotten the points that we were hoping for. Make sure we're done. So 10 out of 10, yes, yes. Okay, so no posting to a ledger. Okay, we're going down to 3 now. Okay, number 3. Okay, you're going to get different numbers than I am. Okay, this is going to be about direct labor. Yep, the first 2 was direct materials. Okay, so in fact, I'll put next to the number direct materials, direct materials. Nothing wrong with identifying what you're working on. Direct materials. That's going to happen here too. And then we're going to direct labor. Okay, direct labor. Oops. That should be direct materials. Sorry about that. We'll get there. All right, materials. Okay, one moment. I am going to pause for a moment. Be right back. Okay, so now our number 3 is going to be direct labor, and so will number 4. All right, so, and we're still using job numbers 200 and 305, which is cool. Okay, so now we're going to work on direct labor, okay, and we're going to need the WIP account because direct labor is going to go into WIP, okay, so I'm going to take these numbers out, okay, and remember these are inventory accounts. So it's going to have a debit normal balance. And then this one here would be finished goods, but I'm not going to put that in there. I'm just going to figure what they're telling us for the direct labor. So the direct labor during May accumulated 660 hours of direct labor costs on job 200 and 830 hours on job 305. So here are your hours. Okay, so be sure to label them, kind of like we labeled units for materials. Okay, so we've got 660. Let me go back. 660 and 830. Okay, so these are hours because that's how direct labor is calculated most of the time. Okay, so once again, I'm going to put direct labor. Okay, so then we have a rate. The total direct labor incurred at a rate of $19 an hour for the job 200. So I'm going to fill in 19 there. And then here's my answer for 660 hours times $19 each. And then direct labor for job 305 is 16. Okay, and so we're going to show this. Okay, and we have, so together, here's how much the direct labor to WIP is going to be. Okay, so let's go up here and next to direct labor, we're going to debit. Okay, equals this amount here. Yep. And we need a credit to account or wages payable. Wages payable because these are employees and we don't lump in wages payable in accounts payable. It has its own payable. Okay. A lot of other things will be lumped into accounts payable, but we don't lump wages payable in there. Very good. Okay, so let's do this. All right, so we're going into work in process for all of that labor. Okay, now, yeah, so you could recheck it if you wanted, but I don't think you need to, because I think we got it. So I think you have a different set of numbers, so be careful with that. 25,820 is going in as direct labor, and then it's coming out of wages payable. Okay, that might be something new, but here is the wages payable and has a credit balance. Okay, we're going to do this again, but now with a little more knowledge from us. Okay, so now we need to figure up the hours for this one. Okay, so we're down here now. So job 200 and job 305, still using the same job numbers. That is very nice. So you don't have to switch back and forth. Okay, the first one is 2,500 hours and 3,000 hours. Yep. Okay, let's put the hours down. And then for our job 200, it is $28 an hour. And for our job 305, it is $24 an hour. So here is the amount of direct labor for this job and the amount for the direct labor for this job. And together, they add up to 142,000 going into work in process and wages payable. Okay, so this is going to happen on the last day of May. Okay, so we're going to put May 31st. And we're going to debit work in process with 142,000. And then out of wages payable, 142,000. So we're going to record what we owe them, but we're going to show the expense in work in process. Okay, let's check it. I think we got it. And let me give the color here. So we want, once again, DL, direct labor, is going to have, just use, doesn't matter, that one and this one. Okay, All right, so I think that is, so there's 2 direct materials, 2 direct labor. Now I believe here comes overhead. Okay, overhead. So number 5 is manufacturing overhead costs. MOH. Okay, and you have to watch it because I have a clearing account for my manufactured overhead here. And we'll list these however we need to. Okay, so okay, so it says during May, Keenan Company incurred manufacturing overhead costs as follows. We have indirect materials, indirect labor, utilities costs, and factory depreciation. So let's go ahead and put these in here, okay, by what they're saying. Okay. And then depreciation for the factory. And then you're going to want to come up with a total of that manufacturing. Okay, so these are all debits. And okay, so we have debit and all these are debits, and then out of here comes 15,140, and it goes into applied here. This is applied. Okay, all right, so now let's see what they want. They want a debit to work in process. Okay, that's fine. So hang on just a minute. We're actually going to put them on the other side so that we know how much they come to. So let me do this again. So each one of these is going to come in and we're going to add them up. There's 15,140. So okay, so out of this account comes 15,140, and then we're going to apply it to work in process. All right, so you can expect a balance on either side here, because once again, we're working with an estimate to see how well we predicted what will happen and how close we are. Okay, because the closer that we are, the more we can tell a story better, because it means we're understanding what's happening. Okay, so then all of these amounts get put in as credits to each of these into, just a minute. Nope, I think I had that backwards. Okay, so let me go do it again. My fault. Back over on this side. Okay. Okay, so there it is, manufacturing overhead. So once again, I am going to key in the debit and the okay, so oh, here's what's going on. Okay, while it is so indirect, utilities and factory, those all qualify as manufacturing overhead. The entire amount of manufacturing overhead is those amounts added together. Okay, and then They come out of different places, right? So they're going to be credit to, okay, so all of this goes in here. Okay, let's see. So 15,140. Let's see what we got. Yes. So then the credit goes to, it's going to come out of, so the amount for materials. Okay, so I guess we're not actually putting it in the manufacturing, the overhead account right this minute. Okay, but they said indirect materials is going to come out of materials, even though this is also where direct materials come out of. Okay, and then, so we're going to make materials go down by the amount of indirect materials that we requested. Remember, that's in here already. And then direct, what wages payable, right? Wages payable is going to be indirect labor, and it's going to get credited to wages payable. Yep. Okay, so 5760. And then we have utilities costs. Okay, so I think we have a utilities payable, which I have never seen before. Usually it's accounts payable. Okay, and so here we go. And it is $1,050. And that is represented here. So 1, 2, 3, and then the last one is factory depreciation. So factory depreciation is 49.90. Let's see here. No. Okay, so depreciation is 49.90. Let's see what we got here. Accumulated depreciation is 49.90, and utilities payable is $1,050. Okay, so that's how it should look. Accumulated depreciation should be 49.90. Okay, so we're gonna credit these. So this is crediting materials for direct materials, indirect materials, right? IM is indirect materials for 3,340. This gets credited for the indirect labor. Okay, then we have a credit going in for accumulated depreciation of 49.90 and a utilities payable of 1,050. And all of those get added together to go into work in process. And we don't even know how much is going to go to each job, okay? But we just want to know this entry here. Okay, let's check it, make sure we're right. Okay. Okay, we're going to do something similar. Manufacturing overhead costs. Okay, so same kind of deal. Whoops. Okay, and this is going to be here. Number 6. Number 6, manufacturing overhead. Okay, so this one says, during May, Bergen Company incurred manufacturing overhead costs as follows. So we're going to make all of these come out of the accounts, right? So we got 8,800 for indirect materials, 6,600 for indirect labor. Okay, so you don't put them in here. Okay, this is just by stepping. We're just by stepping this manufacturing overhead account. We're not quite ready to use it yet. So once again, here's the amount that we'll credit for indirect labor. Okay, and then accumulated depreciation is 9,000 and utilities payable is 6,600. If you add up these 4 credits, you'll find we're going to debit manufacturing overhead. Okay, so let me see here if I got all four. Yes. So it looks like we've got 31,000. It's going to go in as a debit to work in process. And this is May 31st. And it doesn't like it if you don't spell May correctly. Okay, the debit goes to 31,000 to WIP, work in process. And then it comes out of materials for the amount and comes out of wages payable. Accumulated depreciation, or let's do utilities payable. Like I said, I've never heard of utilities payable. Most of the time it just goes to accounts payable. But okay, then this last one is accumulated depreciation. So if you need help with that, and it's the last one for 9,000. There we have it. Okay, so this is doing some journal entries for the overhead. Oh, guess what? Work in process. Oh, we want manufacturing overhead. My fault. My fault. Okay, let's try this again. So, oh, wait a minute. Yeah, let me take this out. This actually goes down here, manufacturing overhead. So let's take these out. Okay, manufacturing overhead is should be right, should be the same. I just debited to work in process, but I meant manufacturing overhead. Manufacturing overhead. Manufact. Okay, hang on. Looks like we're missing something too here. So utilities payable, I'll go back and look. So manufacturing overhead. Manufacturing. Okay. All right, and then let's double check. I was kind of wondering how in the world these two numbers got to be the same. But let's see. 660 and utilities is 4,800. So that's, there we go. My brain was going, how can that be the same? All right, so now here's how you fix it. So now this amount, it's got the right account. It just needs the right calculation. All right, so this is going to be 4,800 here. Well, you can see me make mistakes. And then if you make them, hopefully you won't feel so bad because it happens to the best of us. Okay, so there we have that. Okay. Okay, so then for 4, all right, this is applying manufacturing overhead. Okay, so here is number 7. Okay, applying manufacturing overhead. Okay, so we've got to find out what the estimate is in total. So it says Bergen Company estimates total manufacturing overhead costs will be 620,000 for the year. Direct labor hours are estimated to be 80,000. So I've got these two numbers here. Remember, this is a dollar. The total manufacturing are dollars, but the direct labor is hours. Okay, so we're going to do a calculation of 620,000 divided by 80,000 hours, and we will get $7.75 per direct labor hour. You say, what is that? This is how we're going to apply the overhead. Okay, so I'll put this, how MOH will be applied to each job. Okay, job, yep. Okay, so let's go to job 200. Okay, so they say, so let's go ahead and plug this in. So when we calculate the predetermined overhead rate, that's this, predetermined overhead rate. You're not finished, but it's good to know what you're looking at. It's good to say what you're looking at. So for every direct labor hour, we're going to apply $7.75 of overhead. And then now they're telling us, based on what we did up here, that we had 2,500 direct labor hours for job 200 and 3,000 direct labor hours for job 305. Determine the amount of overhead applied to WIP jobs 200 and 305 in May. Now we're going to calculate it. So here is the direct labor hours. And the amount is 2,500 times 775 is 19,375. And then this one will be 3,000 hours times 775. So they both have an amount. And then this is the total of both of them. So they want the total of both. Okay, so we're looking at 42,625. Okay, 42,625. Now let's do a journal entry here. So we are going to use the manufacturing overhead account this time, where debit on the debit side is the actuals and on the credit side is the applied. Okay, and here's how much we're going to apply. So the applied goes in as a credit to manufacturing overhead and a debit. Okay, so I'm going to put MOHA, applied. Yep. So let's go ahead and do this one. Okay, so this is going to be May 31st. And we're going to go into work in process. This is applying the overhead. And it's come out of manufacturing. Okay, let me see what they want. Manufacturing overhead. Copy. Okay, I must have misspelled it. All right, and of course, our journal entry must balance. If it doesn't, it's not a journal entry, right? So there is the entry to apply it. Now, remember, direct materials, direct labor is also debited to work in process. Remember, they're kept separate by their jobs. Okay, so I guess I didn't highlight everything up here. That's okay. Onward we go. Okay, we are number 8 now. Okay, so we're going to figure out our rate, our direct predetermined overhead rate. We'll apply it to the number of actual job hours, actual hours. And I'm going to put actual here, actual direct labor hours, because sometimes you get estimated direct labor hours and you only use that one for calculating the rate. Okay, so actual. Okay, yep. All right, so we're Salinger Company, total manufacturing for the year. I'm just going to put this in right here, 112,000. Okay, and we are expecting a $28,000 direct labor hours. So 28,000. Remember, those are hours, not dollars. Okay, so then it looks like we've got a $4 per hour overhead rate, and it says now we got the amount of hours, right? So job 200, the actual hours are 510 and 820. Okay, and then we need to change our rate to $4. And then we need to make sure to calculate. So 510 times $4 and then, all right, so here's the amount applied to job 200. Here's the amount applied to job 305, and then together. Okay, so determine the amount of overhead applied to jobs 200 and 305. So it looks like it's 5,320, and there is the entry. It's going to go into WIP, and on the credit side of the manufacturing overhead account, which means you're applying it. You're applying it. So let me go ahead and color this. And then there's the entry that's going to be made. And that is going to go to each job. Okay, it's going to go to each job, but right now we're just doing it in aggregate. Okay, so 5,320. And we'll go into work in process and come out of manufacturing overhead because we are applying it. Okay, let's check our work. I think we're good. Okay, two more. All right, so now here we are. Okay, so we've got our materials, our WIP. Okay, our accumulated depreciation. We've got our manufacturing overhead. Okay, so let's do job. Our job 200 has 2,400 units, and job 305 has 2,037 units. Okay, so here we go now. Okay, for direct materials, okay, we're going to have direct materials for both. One has 7,500 units at $8 each. So there's your direct materials going into work in process for job 200. Job 305 has 1,460 units. Be careful. I know I'm okay. And this is going to be $5 a unit. So there's the units times. Okay, so there is one amount for that job. Okay, so let's go ahead and make that color that it is. Okay, all right, so there's the direct materials. Now we're going to go to direct labor. Direct labor accumulated 2,600 hours of direct labor. So I got to change that 2,400 to 2,600. Then our labor hours for job 305 is 3,100. Okay, now we need to look at the rate that they're paying. Okay, so job 200 paid $28 an hour, and job 305 paid $24 an hour. So there is the direct labor And there is the direct labor. So now, once again, this is job 305 so far, and job 200. All right, now we're going to work on some overhead. So they said direct manufacturing overhead costs are $620,000, and direct labor hours are estimated to be 80. So here's your predetermined overhead rate. Yep. Okay, 775. So now what we're going to do is we're going to take 2,600 times 775. So this is the amount of overhead applied to job 200. This is the amount overhead applied to 3,100 hours. Okay, and then the total job cost. Be careful. So you're going to have to add. Okay, so determine the balance on the job cost for job 200 and 305 at the end of May. All right, that's fine. So we have to add up all three. One, direct materials, direct labor, overhead. Okay, same with this one, direct materials, direct labor, overhead. Look, labor is your biggest expense of all. Here is a total then. So now they want the total. So for job 200, just a minute. Okay, I got 152,950, and then job 305 is 105,725. And then the last thing is the product cost per unit. Okay, product cost per unit. So you're going to have to get used to this, because a lot of times they'll ask that. All right, so that's why it was important to know how many units for each job, right? So yeah, 2,400 units that were completed for job 200 and 2,037 for job 305. So what we're going to do is we're going to take this total here and divide by the number of units. Okay, so total amount divided by the number of units gives us a product cost per unit of $63.73. Okay, and then 305 is the same way. Here's the total costs for all of these 2,037 units. And then when we divide by that number, we get $51.90 per unit. $51.90. Good. Good, good, good. Uh-oh, I think I got one too many zeros. Oh, I put the wrong thing. Yep. What one? Okay, too many zeros. Let's try this again. 152,950. Okay, so let me take that out. There we have it. Let's try this again. Okay. All right. Last one. Cost of goods sold. Okay. Cost of goods sold. So, and so let's go down to this one. Number 9. So it says, Casita Company completed 3,000 units. Okay. 3,000 units during the year at a cost of $5,400,000. So here is WIP. Okay, here is WIP. WIP has a debit normal balance. I don't know anything about the beginning balances, but I do know that all of these went out of here. Okay, so this is going to be $5,400,000. All right, and that represents 300,000 units. 300,000 units. Okay, so just in case we need to know. The beginning finished goods had 40,000 units. And I am going to move this down. So bear with me a minute. Okay, so we also take this out. And we're going to make this go down. We've got, sometimes you have to back into something. Okay, so okay, I'm going to make another line here. Insert. All right, so once again, I do want to remember that this is an inventory account. This is income statement account, but expenses have debit and oral balances. So it says that we had 40,000 units at $560,000 a piece. That's what the beginning work in process is. Beginning. Okay, beginning. And if you want to know the price, right? If you want to know the price or because this is first in, first out. See, first in, first out. So we're going to have different cost flows. So to get the amount that this cost us, take the total and divide it by the number of units. Okay, so that's $14. All right, and then down here, this is 300,000 units. Okay, 300,000 units. I put that there. It came out of work in process and into finished goods. This is known as the cost of goods manufactured. Okay, so now we have this amount and this amount, and now we have finished goods that are available. So let me fix this. Okay, so here we are. Now I'm going to come up with an amount that is available here. So we're going to add these two together. So these are all of the finished goods that are available. Okay, are available. So, okay, so then we're going to have an ending balance down here. E is for ending. And don't worry, we're going to get to the cost of goods sold, I promise. Okay, so now we're going to just do available. This is very important because you might find yourself with a problem that's a little more complicated, right? So we're going to add those two together. So this is the total available in finished goods that we could sell. And if we were to sell out, all of this would go out of here and this would be zero. But determine the cost of the goods sold for 180 units. Okay, 180 units. So the first 40 came out as 560. And then the next 140 came out times 18. Okay, so because these had different costs, right? These beginning items in finished goods had a cost of 14, but then these 3,000 we just moved from work in process to finished goods now cost $18 each. Okay, and then we keep those and we add them together to find out the cost of the goods that were sold. So because this is first in, first out, okay, hang on. Okay, so here's how much went out. Okay, and I just want to make sure this is right. So there is something left here in finished goods just for fun, even though they're not making us tell you what it is. We can take the available amount and subtract the amount we sold, and that means there's 2,880,000. And how many units? How many units? So 40 is gone. 140 and 300,000 minus 140. I believe that is 160. So let's just calculate it. So equals 300 units and 140. Yeah. So here's how many units. Units, if they were to ask how many units, but they want the dollar value of the cost of the goods that were sold. Okay. The dollar value of the cost of goods sold. So it's there and it's there. Okay, this one was just a check figure just to make sure that it was calculating correctly. All right, and if they would have asked for an ending balance in this finished goods, then there it would set. So you have to know the flow of your job order costing. Whoop. So we got $3,080,000. All right, so I think we're good for cost of goods sold. Okay, that's it. Okay, we're going to do, so let me say goodbye for now. I'll stop my share. Say goodbye for now. We'll see you on the next video. Keep up the hard work.